Hello there, Maverick Currency traders. This is Rob Reinhold, joined by Ankit Sharma. And I gotta say, we have just closed up July's monthly. We've just closed the July books, and I gotta say, great job, Maverick traders. We had a ton of payouts this month. Ankit, you have anything to add to that?
I mean, I would say that the traders, I would say this is the best month so far, and I'm so happy that this is again is the best movement that we've seen so far in 2022, and the traders are able to capture that, which is awesome. So I think that's a good testament to following rules and jumping on when something is moving.
So great job in July, but don't pat yourself too hard on the back because the market doesn't care what you did in July. Let's look forward to August. In this session, we're going to go over the news of the week. Lots and lots of news, lots of movement. We're going to update all the scores from +3 to -3. And then, as always, we take the strongest, we pair it up against the weakest, and those are the trades we hunt for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
I'm sure you've already heard by now, but we had a huge plunge in equities. So we'll get into the US numbers, but around the world, we had big sell-offs, something like a 9 or a 10% sell-off over in Japan off of the Nikkei dropping. And let's talk about the Bank of Japan right now because we got another rate hike. So this is the second rate hike since 2007. And we are seeing this carry trade really unwind on the yen. For those of you that don't know, let's give a quick crash course on the carry trade. Remember, in the world of currencies, you earn an interest rate differential. If you buy a high-paying interest rate on a currency, so let's say you were to buy the Aussie, that's maybe somewhere around the 4 or 5%, and then you short the yen, which was at 0.1% or 0, all of a sudden you get that interest rate every time you hold these currencies overnight. So a lot of people have been buying these currency crosses for the interest payments. But all of a sudden, when the Aussie dollar interest rates start coming lower and the yen starts going higher, people want to get out of these trades. And there's a lot of people in this trade, so it's a big move on the way out. We also heard from the Bank of England on Thursday. They came out and said that they did cut rates as expected. But they said, look, do not expect us to cut rates more. We're going to be very, very selective. This is different than what other central banks said. Most central banks have said, we're cutting and we're going to be cutting more. Here is the problem with it. The pound still went down on the news. So remember, we always say the news isn't important. The reaction to the news is important. If news comes out and you say, oh, it should have gone higher, and it went lower, that is a really good sign that you're wrong. Remember, the market's always right. You're wrong, and that currency is most likely going to go lower. So Bank of England cuts rates, says they're going to be stingy on rate cuts going forward, but the pound did not move higher. It actually fell from that. We also heard from the U.S. Federal Open Market Committee. They came out and they held rates as expected. I've been very vocal over the last couple weeks saying I think they should cut rates in this meeting. I think they were going to cut rates in this meeting, but I said the market is saying they're not, so they're probably not. Sure enough, they did exactly what the market expected. And all of a sudden now, if you listened on the TV after this big sell-off that's happened, everyone's saying, oh, they should have cut. They should have cut on Wednesday. Look, they would have been saying something different if the market was up on Friday. They all would have been saying how smart the Fed was. So look, tune that out of your mind. The Fed is going to cut rates in September. They're going to do it probably 2 more times after that. That's what the market is pricing in. But remember, it doesn't matter what the Fed is doing. It matters what are they doing in relation to other central banks. If the Fed is cutting 3 times, but other central banks are cutting 7 times, guess what? It's going to hold up much better than the other currencies. And the risk-off move hit everything across the board. We got crypto sell-off, but you know what? Bitcoin held in pretty nicely for the week. I want to go over the news. There was a ton of news last week. We don't have enough time to cover all of it, but I want to cover just some of these. The Aussie CPI. This is the report I was really looking for, and I went short off of this report on the Aussie CPI. About a month ago, we had the Kiwi, this exact same thing happened. We heard from the RBNZ, and they were more dovish than the market expected, and then their CPI report came out less than expected. The Kiwi got absolutely obliterated. And I said, I'm waiting and wondering if the Aussie is going to do the same thing. We got a weak CPI print. We hear from the RBA this week. And I said, look, I like the Aussie short. I think this is something to take a look at. All right, let's see. What else do I want to talk about? Okay, let's talk about Swiss franc CPI was weak, but guess what? It doesn't matter. This is where you could say, oh, the Swiss franc should be going down. Inflation's negative. Guess what? The Swiss franc is going up. If you were to have that belief, you are wrong. Remember, the market's always right. On Friday, we got the payrolls report, much weaker than expected. If you remember back a week or two ago, I talked about how right now, bad news is good news. And I said at some point, bad news will start to become bad news. But right now, it's good news. Well, guess what? We have just hit that point. Bad news on the economic numbers is now actually bad news. So from here on out, if we get weaker than expected economic reports, expect to be taken as bad news for the currency. Lots and lots of crazy stuff last week. Let's take a look at the final numbers for the week. And then we're going to be setting our sights on the week ahead. If we talk about equities, equities were down anywhere from 2 to 4% in the US. I think the Russell went down about 6%, which is its largest loss since I think last February. Big sell-offs around the board. Crypto dropped 7%. We'll take a look at all those individually. Gold really coming up near all-time highs. It responded well in the risk-off move. And oil sold off. Oil's more risk on than risk off. Here is the S&P chart. Now, I actually did the video on Wednesday, right here. And I talked about how that was a really nice bounce off of this support level here. And on Wednesday, I said, hey, look, we've been pointing out these long upper shadows as being not very good bounces. We got this bounce, and you can see it's got a shadow, but it was a really nice bounce. And we took a look at it at the futures that had a nice green candle like this. I thought that we had had a nice bottom and that we were likely headed a little higher. I said, we're not going to go to new all-time highs. We're probably going to have to back and fill a little bit. As you could see, Thursday, it said, Rob, you are wrong. However, we still closed right between the two moving averages, and I said at this point, I don't have any expectations that that was a bounce, but I don't know where the market's going. And you can see, gap down, bad report on economic news, and we are now bearish. So yesterday I said, look, I don't know. I need more data. Well, guess what? We have more data, and we are definitely on the bearish side here. Ankit, I know you and I talked earlier about, we've had some big selling here. We're seeing huge volatility gains. What happens is we get weak action, and then these big rallies. Do you think that we're due for one of these big rallies next week?
That's a good question. And I think that's really where we're going to be setting up next week. Every time we see a big move, especially like what we've seen today or this week, when volatility increases, there are going to be more bounces in between. That's just the nature of volatility. So going to next week, I think there will be times where markets might drop, and then there'll be times when markets might just catch on a rally. Those are where moves get extended, and we get these counter trend moves. Right now the trend is turning lower, but we'll get these sharp moves on the upside. That's just the nature of it. So I do expect markets to remain under pressure, But at the same time, I think markets are likely to go bounce as well because today is a bit of a reaction of the U.S. employment report. So when we go to next week, the dust's going to settle, and we'll probably see some relief rallies in between. But I think what we are bracing for is some volatility going into next week.
And I totally agree. I think the name of the game is volatility. And I also think the name of the game is rallies are likely to be sold off. We have been for months and months and months in a market where pullbacks were bought. Anytime it was a sell-off, you bought and you were rewarded for it. I think we've now changed. We're below the 50-day moving average. I think that's changed. Yes, you get huge rallies, but until we see bullish price action, we have to assume that the risk-off sentiment is going to stay. And speaking of risk-off sentiment, this is classic risk-off. Now look, 4.23% is not classic risk-off. There's a lot of stuff going on with the yen. We talked about the Bank of Japan raising interest rates. But remember, I said it's all in relation to what other central banks are doing. Right now, the yen is the only central bank that is raising interest rates. Everyone else is saying we're going to lower these things 3, 4, 5, 6 times. And the Bank of Japan is now raising. That's why you're getting such a big differential. The Swiss franc is a pure flight to safety move. There's nothing going on with their central bank. Their central bank has been cutting. They were one of the first ones to cut. So this move is just purely a risk-off move. And I actually think the move is a little bit bigger because the dollar is usually a risk-off currency as well. But we have the 10-year bond is really falling apart. And so when the dollar is no longer a currency of safety, you get that money piling into Swiss franc and yen, which is why I think those were bigger. As you can see, most currencies against the yen, Swiss franc, they all dropped, 1.5%, 2%. The Kiwi had a bounce, and the Kiwi failed to go down. I personally think the Kiwis had the biggest fall. It has fallen the most, and I just think at this point it's catch up, especially with the Aussie. Anka, would you support that, saying that the Kiwi isn't really a great currency? It's just gone down so bad that now everything else is going to catch it.
Absolutely. And, I made that shift just last week when, I noticed that the Aussie and the Kiwi the Aussie kind of replaced the Kiwi as the weakest currency. Aussie did really well back a couple of months ago. Like June, Aussie was killing it. Even in early July, then we started to see that rotation. So I think that's what's going on. I think Kiwi is just not a great buy, but it's not a great sell. And I think that's where the traders are piling into is things that they can short that has had some premium built in. I think Aussie's kind of going through that correction. Even pound right now is going through the correction because pound did really well in the last 2 or 3 months as well. So we're just getting these rotations in currencies where there's more value to be had when something is more on the premium side. So I think the currency is likely to play out the same way, especially going next week. We also have the RBA as well. So the focus is going to go into the Aussie. So I think Aussie likely to continue playing out.
Totally agree here. Cryptos down across the board. We'll take a look at the crypto basket and each one of the cryptos individually. So where do we stand right here, right now? Well, we are clearly below the 20-day moving average. We are clearly below the 50-day moving average. The slope of the two they're not both going down. The 50 is still going up. So we're to -2 in the markets. So -2 is a moderately bearish outlook in the markets. Now, this is why I think the dollar is really struggling. Look at this absolute collapse in the 10-year U.S. government bond, down to 3.8%. Now, I think this is the lowest level. I can't remember what I heard. I think it was since maybe August of last year. And we're starting to see mortgage rates come down, which is good news. This ultimately is good for equities and good for the economy, but when they're falling apart, it means that people are scared. And when people are scared, that's not good for markets. Taking a look at cryptos, they've done just fine. And look, I know they had a down week, but let's take a look at just the story of the cryptos. So back here, we just had this really nasty move from all-time highs, well, almost all-time highs, to really breaking down some serious levels. This was the bottom of the base at this level, and we broke down below it, but we got a big rally. And I said, look, we want to buy this breakout. Had a nice breakout, had a nice pullback, but now we have completely fizzled. Everything that was bullish about cryptos, like I said, we had lots of nice little support lines here. It failed. It failed. At this point, I am neutral. Neutral, we are between the 20 and 50 period moving average. I am neutral on cryptos. I'm not bearish. I think they're actually holding in a lot better than stuff like equities. Equities look really bad compared to crypto, but it doesn't mean I have to go run out and buy crypto. It's just, to me, it's a neutral. We went from a crazy week of news, a crazy 2 weeks of news, to a really light week this week. We do have the RBA on Tuesday night. They are not expected to cut rates, but we probably are going to hear about them talking about cutting rates, which is exactly what the RBNZ did. That same day, or the same morning, sorry, that's going to be on Tuesday night. So that's really Monday night on RBA. Tuesday night, we got unemployment out of the Kiwi. So if you're looking to play Aussie or Kiwi, Tuesday looks to be a really good day, as we should see some volatility. And really, the only thing left for the week is Canadian employment. And the Canadian dollar has stopped going down. Well, I shouldn't say stopped going down, but the velocity of its fall has definitely lessened lately compared to what it was over the last couple of weeks. So one central bank announcement this week and just a few reports. If this was a normal week, I would come on and say, hey, I don't think it's going to be a good trading week. There's not a lot of activity. But guess what? The whole market is only activity at the moment. We are just seeing crazy volatility, so that means movement. Movement means opportunity as traders, so that means we want to be active this week as well. So this will be the third week I've told our traders, be active. Be active, look for setups. This is a good week. I'm going to go through cryptos. Look, I'm neutral on the whole basket, but is there one gem out there? And I look at Bitcoin and I say, no, there is not a gem here. The bullish price action is over. So again, we ran up, we broke through resistance, we came down, we tested it. We didn't really break out to a new high, and now we are down below this last support point. I'm in a neutral, total neutral on Bitcoin. And if I take a look at stuff like velocity scores, they look terrible. They just look like they're falling at the moment. So definitely not looking to touch Bitcoin, not looking to touch Bitcoin Cash. But if I had to buy one, this would be the one. I mean, take a look at it. It's actually still in bullish price territory. It's above the 20. It's at the 50. It's at least coming down and trying to bounce off of these levels with some long lower shadows. Here's a great thing though. I don't have to buy anything. I don't have to buy this. Moving on to Ethereum, you can see this one's just straight up nasty. This is just bad. It's bad in every way. It has broken down. It broke down 2 weeks ago when the other cryptos only broke down a couple of days ago. So Ethereum is just a flat out sell, and throw in Litecoin as a flat out sell as well. -2, -3. Really nothing to talk about here. All right, let's move into Forex. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader?
All right, well, let's begin with the dollar. And I'm talking about dollar. I mean, we are in this interesting times where if you look at dollar against the Swiss franc and the yen, it's a whole different picture. But if you look in the basket, dollar is actually not the worst one. And I'm talking about it, how this thing is just range bound. And here we are, even after collapse in the bond yields. Well, dollar is still holding up relatively. It hasn't really broken down. Now, the question is that, could this be the next one to fall? Well, absolutely. We can make a case for that. But we need a confirmation of break below that support. So This is, again, nothing has changed for me as far as the dollar outlook goes, but I'm definitely more open to looking for a break of the support. But I don't want to jump on that until I get the confirmation, because we are at this point where there's not just the dollars moving, everything is moving. This kind of reminds me of 2022, where not one, but all central banks started to move around the same time. So dollar, even though the trend is a -2, I'm still holding out on this trade until it really breaks that support. But we can see the velocity today is terrible after the job support. Now, looking at the yen, and oh boy, I mean, I knew how the yen's going to unfold, but a lot of traders didn't know the timing of it. But take a look at it. This was, as Rob said earlier, it's getting that the carry trade is unwinding, and that's where it's very tilted one way, and now we're just getting it tilted the other way. So it's a +3 on both trend and velocity. And this is, again, no longer the same move that we had seen for the last few months, a year. I mean, this is the first big turnaround. And I think this is one that you want to be careful about. There will be some pullbacks in between, but those are the ones that I think will be great opportunity to buy. It does look extended. And I think that's the hard part for some of the yen crosses is that, they do look extended on the basket. They do look extended on the velocity, but this is not the one that we want to be looking at the other way. I think we only want to play this on the upside, but I do expect going to next week, there will be some pullbacks because, if you take a look at Nikkei markets, the Japan markets, now that's down 10%. So there's going to be some movement, some relief rally in that Nikkei, and then we'll probably see some pullbacks in the yen. So, looking for some sort of pullbacks going to next week.
On the plus
now,
side,
the Swiss franc also,
we no longer have to worry about yen intervention. That's totally not a concern anymore.
Absolutely. And I think this is a great time where not only we don't have to worry about it, now here we are, Bank of Japan is now worried about their stock market as it's collapsing 10%. So they're trying to calm it down. But again, these are the strong forces that are playing out in the markets. Now, let's just talk about Swiss franc. Now, this is, again, we talk about risk on versus risk off. We have a strong risk off play in the markets. And Swiss franc is right there on the top of it. It's not about what the central bank is doing right now. This is about that risk, risk off play. I think Swiss franc likely to stay strong until or unless we get a pullback in the markets, and I think that's where we'll probably see some sort of pullbacks. So it does look extended. This looks very similar to the yen, and I think eventually they will catch some breaks. But I mean, this thing is just starting off. Last 2 days has been pretty strong as the market has pulled back. So if you're looking for what the Swiss franc's going to do, take a look at what the equity markets are doing. Now with the euro is catching a little bit wind of the Swiss franc, but you can see that this thing is weaker compared to the Swiss franc. So no reason to be buying the euro where I have Swiss franc working much better. So I don't really love the score here off on the euro. The trend is a 0, but it's not the best looking currency here. Now the British pound, take a look at this one. This is now -2, and remember, big change in those scores. We were at +2, and now we are -2. They cut rates, and remember, it's all about how the price action is. And this looks like has a little bit more downside here. I think it will have a little bit of a bounce, but now it's below those moving averages, so we have to go negative on the pound as well. Now let's talk about some of the growth currencies in CAD, and I've talked about this in my class yesterday. Well, CAD is deviating from the USD, and CAD is a lot more weaker because they did talk about not only they cut rates, they have done 2 rate cuts, then expecting for more rate cuts. This thing is falling apart as well, but I think all these -3 scores, they're extremely bearish, which means that they will catch some bounces here and there. Right now, it does look extended both on the trend and the velocity score. Same story for the Aussie as well. Aussie is also a -3, and you can see this thing is just falling apart. And in just a short time, mid-July to now, last 3 weeks, all this thing has happened. So again, we'll see what happens with the RBA coming into next week. Maybe expect some more price action off of that. But this is clear negative score in the Aussie here. On the other hand, Kiwi has slowed down, but you can see this thing was falling, but now it's just making a little bit of rally. So right now, Aussie's more in the driving seat compared to the Kiwi. I don't really love the Kiwi short. There's no news on the Kiwi. So I want to put this on the shelf here. Even though the trend score is a -3, unless it really rolls over from that little bear rally that we're seeing on the daily chart, I don't want to be jumping on until it really breaks that support. So it's pretty clear where the movements are, but I think volatility is the name of the game here, and expect some pullbacks, some rallies. That's what we get in this volatility environment markets.
And Ankit, you're right. The trend is crystal clear. Crystal clear what has happened. Crystal clear of where we are right now. But this is where sometimes these markets, it gets tough because when things are at plus threes and a bunch of things are at negative threes, that's extremes. We're at extremes. And a lot of times when things get to extremes, they have reversals. But before they have reversals, they have very, very strong moves. And typically, they go longer than everyone thinks. So look, this is where it's very easy for a new trader to come in and be like, man, they're at extremes. I'm going to short yen and I'm going to buy Aussie. That trade will get lucky every now and then. And it'll be a killer trade. It'll be a home run trade if you can catch that trade. But the problem is they're very difficult to catch. And what happens is people try to catch those. They try to catch them once, twice, three times. And then by the fourth time, they say, I'm not going to touch it anymore. And that's when they get the big move. So you end up using all your ammunition up. You get gun shy. And then you can't pull the trigger when the move finally happens. These markets can be tough because what's going to happen is yen and Swiss franc are going to keep getting stronger. And Aussie, Kiwi, CAD, pound are going to keep getting weaker. And they're going to keep doing that until it stops. And nobody knows when it's going to stop. That's why these markets are difficult because, again, a new trader looks at this and say, I missed so much of it. I missed it. And yeah, okay, maybe you missed a lot of it. That's in the rearview mirror. What is going to go forward? And right here, right now, the correct trade is to stay long yen, stay long Swiss franc, stay short. At some point, it will end. But typically, those ends are a lot further away than people think. We always say trends go further than people think. Just think about all the times you've seen things unreasonable, too far, too high, too low. You've seen this before. They usually stay that way for a lot longer than you think. When the reversal comes, then, okay, let's pull back. But until then, it's a very simple trading strategy. It is long yen, it is long Swiss franc, it is short the growth currencies, period. Crystal clear. That doesn't mean the trade is going to work, but it means that that is the correct trade at the moment. So let's go take a look at those. All right, like I said, I am not interested in any cryptos. So this is where I want to find out what is the best currency to short right now. So I'm going to put Aussie versus CAD. All right, so Aussie versus CAD means the Aussie has been weaker than the CAD, but over the past 3 days, it's been about the same. So for me, right here, looking at just what's happening right here, right now, Aussie CAD are the same. They're the same as far as strength and weakness goes, so there's not any edge on that one. Let's take a look at yen versus Swiss franc. So let's take a look at Swiss franc yen. And you can see Swiss franc is falling. So it's still falling against the yen. So it's telling us that the yen is the strongest right here, right now. Does that mean it's going to keep being the strongest? No. But right here, right now, that is the strongest. So we can either pair up Aussie yen versus or CAD yen. Right now, they're about the same as far as velocity goes. Looking at both of these charts, again, this is where this is a tough trade because it is extended. It is absolutely extended, but let's go back and take a look at what happens. 4 days down, we got a hint with that hammer candle that there was going to be a pause. There was a pause, and then once we broke down, it was time to go short again. This is what we're looking for. We're looking for that's fine. Even if we see just a few candles just pause, that's all we're waiting for. If we get a little rally, that'd be great. We're just waiting for any little thing to short into, any little thing that tells us there's a trigger, and we can find it, an entry point on something like a 4-hour chart. Here was a great entry right here off of this low base breakdown. There was another one right here that you could have taken as well. At this point, we don't have a setup. We would love to see a little base, a couple more candles fall down, just waiting for a better opportunity than just getting in. Now look, there are trades that I personally make where I just get in. Now the way I do it is I get in with a fourth of a position. I just get in with like a third of a position what it is. So let's say I just want to get in CAD yen, but I understand it's overextended. So I get in a third of a position. And let's say that it just keeps dropping. Okay, well down here I'll take another third of a position and move up my stop. So that way that I can get in it, but I'm not getting in it with my whole position, so any little bounce knocks me out on my stop. So let's say I get in a third position and it bases, it goes sideways. Okay, great. I'm fine. I got a third of a position. I'm hanging out. When it finally does drop, then I take my next third of a position. I'm in a much better situation. Or let's say I'm in a third of a position and we get a rally. And then that rally fades. I can take my next third position up here. I'm in a better place. I did not get stopped out. I can ride this trend longer if it continues. So look, you either have to be patient and wait for a setup, knowing that you may never get it, or I think you start to leg into positions. Okay, what currency crosses do you want to take a look at?
Hey, Rob. Well, you kind of look at the ones that I was looking at. We can take a look at Aussie Kiwi. I think that could be just a neutral play because, like I said, if you're finding difficult to trade Aussie yen or even this is franc, we can take a look at this one. On a daily chart, you can see that this thing has turned nicely lower. And, this is where, there's a potential there for this to fall back towards the support area. So there's definitely more room. So again, looking at some other alternative options outside of those yen and the dollar and the Swiss franc place here. But, like I said, next week going to be another interesting week. So we just have to stay patient. Again, if you're already out of the moves or you're looking for a next opportunity, I think this is a great time to be just a little patient and look for the next opportunity. So that's the game plan for next week.
Let's go through one other scenario before we wrap up. Let's say there's a significant bounce in the market next week. The big question is, how would you play that? And I'm looking at this thinking, okay, well, obviously Swiss franc is the most susceptible to a sell-off because we are saying that it is the most correlated to a risk-on move. Again, the yen has Bank of Japan, it's got the carry trade, it's got its whole bunch of other things, just then the weakness in the market. So I think the Swiss franc is the most susceptible to a sell-off on a bounce. And the question is, what do we want to buy on a bounce? I think euro. I think euro is the one to buy on the bounce. It's probably not going to bounce as big as Aussie and Kiwi, but it's the safer trade. So again, euro, Swiss franc. If there is a big bounce in equities, this is probably the currency I'm looking at. But look, I can't even talk setups here because it's going straight down. I mean, there's no possible setups to talk about because the chart looks awful. So I'm definitely not looking at that for Monday or Tuesday. I'm talking about this later in the week. Expect this week to be volatile, especially the first half. I think we are going to get a bounce in equities somewhere this next week, and I think that bounce is going to be fairly sizable, but I think it is likely to fizzle out because we are more bearish than bullish at this point. Everyone have a great weekend. Let's go have a great August like we had a great July, everybody. Goodbye.